Sir, do you know about this new tech?
What?
It's a phone company.
A phone company?
Imagine this. Everyone in the future will have...
Dude, I mean, I have a phone right here.
No, it doesn't matter.
I don't think everyone will have a
See,
phone.
The company will work. I've already invested in it. Oh, they have opened 3 new plants. I'll double up my investments now. Yes.
Hey dude, that phone tech company you were talking about seems like its market share is declining because iPhone seems like an interesting, better product.
I know it is declining. See, I have invested so much time, so much money. I am still going to invest my money in it.
But no logic, right? I mean, the new tech...
I know it doesn't make sense, but I'll still invest. Sir, what has happened?
I'm not surprised. This is completely normal. Where's your portfolio? Oh,
There,
I see.
dead.
Dude, remember you were investing all your money, obsessing over the company, going through all of this matter.
Research.
You were emotionally invested in this, right? And this is called the sunk cost fallacy. When you've put in so much effort and money into it that you have to make it a success. And because of this, you will lose money in the markets if you are investing. But luckily, we thought we'll do an episode on this and try to find out how to identify sunk cost fallacy and how you can actually fix it. So let's begin.
Yes.
So take a look at this. This is the world's first supersonic airplane.
Weird plane.
It was called Concord. It's pretty cool looking. And it took flight in 1976. Now, the interesting thing is, it was supersonic, your travel times had reduced, people loved it.
Fast.
It was owned by the government, the British government and the French government. And it looked amazing. The press around it was crazy. The future was finally here.
Oh, in good company.
But it cost billions of dollars.
Of course it will.
Now, the problem was everything was great, but it was not a commercial success. And it became clear, no matter how many flights they did, this cannot be profitable.
What do you mean by commercial success?
It would not be profitable. You would keep sinking in costs into it.
But still invest.
So what do you do when you know something is bound to fail commercially?
We won't invest.
But the governments actually continued to invest and spend billions of dollars over 26 years on this project. You know why?
No.
Because there was so much energy, effort, time, press, money already sunk into this. This is called the concord fallacy.
Right.
Which means you keep putting in money into something or time and effort because you've already put in a lot of cost into it. So it's also called the sunken cost fallacy. So when you're investing in that company, now I have nothing against Nokia. I think they've done amazing innovation, very interesting.
Right.
But it's one company in your portfolio. I'm guessing you did not have a portfolio, you just had one company. Because Abhishek. And this sunk cost thing can happen in other things as well. Like, what degree do you have?
Oh, B.Tech.
Okay, perfect. B.Tech. What are you doing
living,
here if you took a B.Tech? Your job has nothing to do with B.Tech.
I'll tell you. I thought in the start it's good for me. I'll do it. But by reaching second year, I realized it is not my cup of tea. It is not my cup of tea.
So why did you continue?
Because Dad has spent so much money. I've made friends, girlfriends. Then I thought I should do it.
So in the second year, you knew your career will have nothing to do with B.Tech, but you still did it because you spent all that time and effort in the first 2 years.
Correct.
Sunk
So I
cost.
thought.
So the fallacy here is that you know that this will not be useful, but you've come this far, so let's just complete the journey.
Right.
And that in stocks actually creates losses. In real life, it could be different, but when it comes to money, it could actually result in exactly that investment you made. So this has also happened to me. 2008, there was this IPO of this company, okay? Before the market crashed, okay? If you can guess in the comments, good for you. Everyone is talking about it. taxi drivers, auto drivers. And then these rich guys came to me, okay? The owners of the school where I was working. They said, should we buy it? I said, I don't think so. And I felt, dude, everyone's talking about it. And then I actually bought those shares. Then the market fell and so did those shares. And I knew it would fall, but I had already invested. And it's 2023, December.
Yes, I am not alone.
I still own those shares. See, fundamentally, do you think you can pick the right stock every time?
I don't think so, no.
No one can, right? Like you'll have the stock that I picked, that I still hold, which will never give me returns. You picked Nokia. There's nothing wrong with that. Everyone has these stocks in their portfolio. It's normal. The problem is not that. The problem is the sunk cost fallacy.
But what's the solution for that then?
So the solution is very simple. Let's talk about your investment in Nokia. So let's, for example, think that you were thinking telecom is the future and everyone will have a phone. Were you wrong?
No, everyone holds a phone right now.
But you made a loss. So maybe the first thing you could do is diversify within a sector. So let's suppose you think you believe in this. You could have bought maybe 4 or 5 other companies.
Phone companies.
Phone companies. One of them could have been Nokia. And you could have picked the leader, second best, third best, fourth best, fifth best. One of them would have turned out to become, let's suppose, Apple. So what would have happened is, these stocks would have gone to 0, let's suppose. And this one stock, Apple, would have actually made all the money for you. Now, were you a genius? Did you see the future that Apple could have become the best phone company in the world? No. All you did was spread your bets in that sector. But there's another problem here. You still put all your money in one sector. Another thing you should do is invest it in maybe 7, 8 other sectors. So your entire portfolio, there should be one part of phone communications. There should also be pharma, there should also be auto, etc., 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 depending on what your strategy is. So that portfolio sector diversification is also important. The problem is if you bet everything on one thing and then it goes down, that cognitive bias is what you want to stay away from. So the first thing, diversify.
Warren Buffett's logic.
And diversify has 3 parts. Diversify within a sector, diversify in different sectors, and what's the third? Good job. Diversify in different asset classes. I actually made a video on asset classes right here, and Abhishek did not remember asset class.
I know.
So equity ke sivai, what other asset classes do you have?
Gold,
Okay.
real estate,
Yeah?
mutual fund.
Mutual fund.
वो तो equity में घुस गया ना.
And
Crypto भी है थोड़ा सा.
there's also bonds, right? So which is fixed income. And don't forget fixed
FD
deposit
है
and
ना?
bonds.
Yes.
Correct.
I have FD, yes.
Good job.
Thank you.
Yeah, if this represents your equity portfolio,
Put it here.
then this might represent, say, bonds over here, right? And then you'll also have that marker, which is, let's say, gold. And one more thing, bring dice.
Real estate.
That dice could be, say, dice. ये dice है? Just one.
मैं कोई बोतल से निकला हुआ भूत हूँ कि एक के बाद एक काम देते जा रहे हो.
This could be real estate or something else. So now what happens is, you'll know that every asset has its day in the sun. 2008 ke pehle, the equity was doing really well. And after that, it did not do well. Gold actually probably did better. After 2009 ke baad, equity started doing well. Again, these are cycles we cannot predict. It helps to diversify within sectors as well. Now, tell me this. What do you think about the future of EV? Bright. Green. Okay. And would you think that it's worth investing this
Yes, of
sector?
course.
It will grow
I'll
in the
do it.
future?
Yes.
Will you invest in one company that
No,
does
for
it?
sure not. I'll try to find at least 2 to 4 companies maybe.
So give me a solution. What's your solution over here?
Well, I'll find 4 or 5 companies and I'll invest equally in it. I think so.
And then EV portfolio is part of your equity portfolio, which has other?
Sectors.
Cool. So the first thing we talked about is diversification. Second thing we talked about is asset classes. And the third thing we'll talk about is?
Stop loss.
Good. You're learning. Good.
I know.
Good.
Thank you.
So basically you have to have a mental stop loss for some of this, right?
What stop loss?
A mental stop loss for all of this if you're an investor. And write down at what point do you think you'll exit. It's really important to, you know Warren Buffett, right?
Right.
People say Warren Buffett never sells, right?
people said, yes.
And he'll hold a stock forever, right?
Yeah, that's what not selling.
But it's not. But it's not true. He never believed in airline stocks. But at some point, he bought, I think, 4 or 5 stocks of airlines. Then he realized it's a mistake. And then he sold all those stocks at a loss. So if Warren Buffett can think about selling, why can't you? So you also have to think, if, for example, there is no growth for your EV sector for, say, 4 quarters in a row or 2 years in a row, I will exit, etc., etc.
Oh, I saw.
A new alternative comes that's better than EVs, I will exit. It could also be a price stop loss. If it falls more than 75-80%, I'll exit.
Sir, what if I don't invest in all of this? I mean, I don't do all of this. I just find the best bond and invest all my money in it. It's risk-free, right?
Yeah, I mean, this goes down to the same thing we talked about. Bonds also have risk. It is possible that a bond defaults. It's possible that a fixed deposit, because the bank went bankrupt, takes all of your money and is unable to return it. So that risk always exists, which is why you diversify within asset classes as well. So this might not be that smart of a thing to do. So here's the bottom line. You don't want to take one stock, fall in love with it, or any asset class and think I'm doubling down and I've done so much, I'll do a little more, even though I think the situation is grim. That's the definition of this bias. Understand that this bias exists. Every human goes through it. And don't be Abhishek. Don't get one stock and put everything in it. Make sure you automate your system. Make sure you diversify. And lastly,
Don't forget to subscribe and like this video. And also share. Right now.
बम्स को एंड में मत रखो, ऐसे रखोगे तो हाथ पकड़ो मेरा. Sorry guys, अब तक तो used to हो चुके होगे.
Probably at the interval I knew it's a weird movie.
तू इतना जल्दी क्यों बोल रहा है? Again, मैं प्राउंड कर दूंगा तेरे को. तू सच में बात करने दे.
कैसे ऐसे?
And the third thing we'll talk about is
Stop loss? No.
stop loss.
Oh shit, yes. Stop loss. Asset
cut.
class, asset Pratish.
Beep.